And welcome everyone once again. I'm Marcel. Like, it's not a surprise that I'm Marcel. I don't know why I'm keep saying this at the beginning of every video and webinar, but I am Marcel and here is today's Watches Breakdown webinar because once again I did put it out for a vote that what do you want, and the majority of the community voted for a live forecast webinar instead of the backtesting webinar. So today we are hosting forecast webinar breaking down the watch list, all the 6 pairs, creating forecasted plans, creating some nice perspectives, and you can follow it all along. You can hear my thought progress that how do I break down the markets. So let's just begin with the first pair, which is Euro US dollar. All right, so what do we have on Euro US dollar? Basically, this is I just apply the advanced structure mapping technique that I did put out in the last recent video, educational video, and is there a picture about it yet? I do believe that there's no picture about the advanced structure mapping. I know that Mohammed has already made the picture about it, the educational picture, but I do believe that it has not been posted yet to the group. I'm just checking it quickly. Yeah, there's no picture. So tomorrow there will be a picture about the advanced structure mapping as well, which will help you guys to quickly take a look at the information if you need something and you can read it from there. In my opinion, before we start to break down the markets, let's just have a chit chat, a small chit chat. And I need your guys' opinions as well. That what do you think about the educational pictures? I do believe that it's a really great resource for all those who just want to quickly take a look at some important information, read the picture, read the information, get the knowledge freshened, and basically move on. So I do believe that it's a really great content that we started to do. I need your guys' opinion as well. That what do you think about the educational pictures? Just a really quick feedback if those are helpful or not really helpful, or something should be updated in the pictures, or they are more useful than you think. They are good. I like it. They are really helpful. They are really helpful. Helpful. Perfect, guys. Thank you. If you do have some recommendation about what can be updated on the pictures or what should we do with the pictures, some additional information or something like this, I'm always open for, ideas. But okay, moving on. So apply the structure mapping, advanced structure mapping technique I just showed you in the last recent video on Euro US dollar. So what I told you is that this 71 level is the last region where I'll be looking at shorts basically. And I'm updating this a little bit. The reason we see this reaction here, this exact reaction where price swept out the previous high point and started to drop down heavily, is because it rejected, not there, but rejected here. Basically, this is the last recent, not just semi-protected, but real protected high point. So you can see that there was a sweep of liquidity, price took out the last recent structural high point, and from this sweep, why can't I click on this? So from this sweep, it did create the continuational break just right here. So that is the last recent protected high point that is not semi-protected, but real protected. Why do I keep saying semi-protected? Because this high right here was semi-protected because there was only one candle that created the movement to the downside. It didn't even break the structure. So technically this is not a real structure. Technically this is not a real protected high point, only semi-protected because it still took out some minor structure on the 15-minute time frame. But why we see this reaction here is because price arrived into the protected 71 level, the real protected 71 level, and took out liquidity inside of it. So we see this huge reaction to the downside. Okay, what else we can see? We can see that price, starting from this low point, broke the last recent high point right here, meaning there's a bullish short-term order flow as well. What else can we see? Is that price arrived into another 71 region that was pulled from this low up to this high point because this was a continuation break on the 4-hour time frame. There is a continuation bullish break, which is also short-term break. What else do we see? We see that we can pull another Fibonacci from this low point up to the high point because this is what I explained in the advanced structure mapping video, that if the movement starting from the real bottom has volume to the upside, which is exactly right there on the order block and volume, then you can pull a Fibonacci out from there as well, and you can expect bullish trades here. All right, so all in all, yeah, it's double bottom liquidity, exactly. It has a really high chance here to be taken out because this is double bottom liquidity, but still this is far away from the 71 level, so price has a chance to reverse it back up let me just tell you the plan, what I do think will happen here. So price will, first of all, I do believe that this will happen. And you know, guys, that I'm majorly correct with my forecast. So price will break this low point. We'll initiate this break. Then I don't know if this 71 level of this bearish range, which creates the break of this level, will be mitigated first before the 71 level mitigation on the bullish area, or after the 71 level gets mitigated here. So let's just create a forecast for both of the scenarios. So first of all, if price breaks this level and just simply continues to this deep bullish 71 level and that it confirms it, we can take bullish trades targeting the bearish 71 level. We pull out from the high to the low, and we can take these longs up to the 71 level where we can expect bearish confirmation trades, and we can take those trades, take that bearish trade down to the double bottom liquidity external 4-hour low point, and this can be targeted. It counts the wick as a clean order block of the black candle at the top. I don't really count this wick as an order block because basically it got mitigated and the volume started from here. So I will just count the whole entire candle as the order block and not just the wick. But once again, if price comes down to the 71 level, we can take longs up to the bearish 71 level that will be located here, and we can take shorts there targeting the double bottom liquidity. But this is just forecasting. This is just fugazi fairy dust. We don't know what will happen yet. What we do stick to is that what we see, and what we see is that price is currently inside of this last recent 71 level. So our job is to look for bullish confirmations inside of this 71 level. Most likely it will be broken. So I know almost for granted that this will be broken, and if it breaks, for example, price just continues the movement to the downside, then we pull the bearish Fibonacci and we will look for confirmation trades on that 71 level. Or if price creates a retracement here and from that retracement it breaks, then we will pull out the Fibonacci from this high point down to that low point, and we will look for bearish confirmation trades here, targeting the 71 level down there. All right, so this is the 4-hour time frame, what we can see right here. Switching down to the 15-minute. And looking for exact entry confirmations and criteria system, what we see is that the level got mitigated, and after mitigation of the level, price created a push to the upside. It rejected on the last recent high right here and created a new breakout structure to the downside. So this low is broken. What we see is that this is broken. So what can be expected here is that if price aggressively reverses here with the market open and shifts the structure, there will be a market structure shift and we can enter in this trade. Because in this case, when price aggressively reverses to the upside, this can be counted as a sweep of liquidity, because, one candle break doesn't mean that it's a break. If price aggressively reverses, there's an educational video about this topic as well, explaining the sweeps. I'm not going to explain it again. You can watch the video. So if price reverses aggressively and shifts the structure, then we can take long trades targeting the 4-hour high point, which is there. If this won't happen, but price will, just create some pullback and then sweep out the low point, this can be another confirmation right here where we can take longs again to the upside. And obviously, like the 4-hour plan, if price breaks the low point, then we will have a 4-hour range and we can take short confirmations on the 4-hour level, targeting the bullish 71 level below it. So this is your US dollar. Obviously, I do believe that there's a really high chance to actually create one of these plans that I just showed you. Really nice price action here. I really do like the price action. I'm going to clean up the charts a little bit. We don't need these levels here anymore. Yeah. Okay. So I do believe that this is a really great chance to create one of the forecasted scenarios. Next up is GBP GPI. GBP GPI is an art. It's an art. It's really beautiful. It's doing exactly as I told you it will do. After the break of the structure, I told you that it's going to follow a perspective like this all the way down to the bullish gap fill. So we are still following that perspective, and we are expecting price to come back up to our last recent 71 level, which is located here, obviously circled with a really, really big ass circle. What has happened previously is that price, first of all, took out the last recent bullish range with this break. Then it created a pullback, and then it created a new structural break to the downside, continuation break. It came back up to a bearish order block and the 71 level, and it made a new continuation break. What can be expected here is that price will come back up to a level again, and it will create a confirmation where we can ride this bearish order flow down to the external low point break, and then look for new bearish opportunities all the way down to the 4-hour bullish gap until it's getting filled down here. So the plan right here is pretty simple and easy. We are just simply waiting for a price to come back up to the 17 level. Once it comes back up to the 17 level, we are going to look for our confirmation entry model in this red circle where price sweeps out the high point, shifts the low point with a bearish volume gap and an order block entering on the 71 level, targeting the external 4-hour low point. So this is exactly what we are looking for. Obviously, the confirmation can not only happen in this circle, price can come above it and create the confirmation somewhere around in between the 1 and the 71 level. And we are looking for these beautiful trades. What I'm also expecting is some little drop here where price creates inducement liquidity based on this previous bullish candle, creates double taps, and then it sweeps out the taps into the 71 level where the confirmation will happen. Beautiful price action. GBP GPI has a really high potential next week. Next up, USD GPI. USD GPI is the exact same thing as GBP GPI. Exactly the same thing is happening where previously we had a bullish price action gap with the market open on Sunday. Then it started to go up, create a less recent range here from low to top, and this range is now broken. You can see that price recently just broke this range, and the range break took place from, let me just put this here, the range break took place from the less recent high point of the bearish structure, bearish market, and we can see the 71 level lined up here, which initiated the break of the less recent bullish range. So this is a really nice situation as well because it's doing the exact same stuff as GBP GPI because it's creating a nice bearish flow all over again, breaking structure to the downside, and it's going to fill up this bullish volume gap right here, or not even volume gap, but a simple gap. So we are looking this gap to be filled, and we are looking for bearish trades on the way down, targeting this gap. So the less recent 71 level can be confirmed. We are waiting for price to come up to this level where we can expect a confirmation, once again, a sweep of a high, break of a low, bearish gap, and an order block. 71 level entering, targeting the 4-hour external low point as our last TP point. Likely price will come up to fill up the order block as well and fill up the overall volume gap here. So I'm not really expecting a confirmation on the 71 level. I'm expecting a confirmation above the 71 level, somewhere around the order block region. But the story is still the same, even if it happens on the 71 level, even if it happens on the order block. We are waiting for a confirmation and then short trades down to the external level. Next up, US dollar, Swiss franc. US dollar, Swiss franc is doing the exact same stuff as the GBP GPI and USD GPI. Here, I do require to check the daily time frame as well because we have been ranging for quite a while now in this one range here. But I do believe now that price has a significant chance to actually break the last recent low point and create a new market structure break. Why I do think this is because this is what price has been doing. Broke the last recent swing low point, came up to a bearish order block and the 71 level, dropped down, broke the low point again, creating a new break of structure, coming up to a 71 level somewhere around here. Let me just check if it was actually a 71 level. I do believe that, yeah, price perfectly mitigated a daily 71 level from where it's dropping down. Just because price is coming from a daily 71 level, I do believe that we will actually see the daily low point to be broken because this is a high confluence on the daily time frame where price mitigated this bearish order block, bearish 71 level perfectly from the previous structure breaking trading range. It's going down to break the low point again, and we are going to see some nice sells. Now back to the 4-hour time frame. What we see right here is that obviously here is the pullback that price initiated after breaking the last recent daily low point somewhere around here. It came back up, mitigated the daily order block, which was located here, daily 71 level, dropping down. After the mitigation of the 71 level, what price did is that it shifted the structure on the 4-hour time frame to bearish, exactly on this line, and that it came back up to mitigate this bearish 71 level. Let me just mark it out for you. Mitigated this bearish 71 level here, from where it initiated another structure breaking movement here with a really nice volume gap. But there was no comeback to this area, and price just kept dropping and dropping down, which puts us in a situation where we can pull out two Fibonacci ranges. One is from this high point, which broke the last recent low point. The second is from the pullback, which got created here and broke the last recent previous structural low point, the lower low, and did put a new lower low into the market. All right, so what we are expecting here is that price has a significant chance to come up to some of these 71 levels where we are expecting our confirmation entry model to happen. We are expecting this 71 level to be mitigated first of all, or confirmation entry model, sweep of a high, shift of a low, bearish volume gap, and then an order block, and then entering into a trade like this, targeting the external low point. If the confirmation cannot happen here, then we are waiting for the second 72 level to be mitigated. Actually, I do believe that price will come up to this second 72 level because this second 72 level is still inside of the first trading ranges in the OTA. It's still inside of the OTA, and we will be waiting for a confirmation on the 71 level if the lower one can't print any confirmation. Why there's one more confluence for the higher level to be mitigated is because there is an order block that is located just right here, a beautiful order block that lines up with this second 72 level. So I do highly believe that price will come up to this level where we will see our confirmation entry model be printed, and we can take like a nice 1-to-7 to 1-to-15 risk-reward ratio trade targeting the external 4-hour low point. So this is exactly what we are waiting for on US dollar Swiss franc. And once again, most likely, price is going to go down, break the low point, and create this nice continuation flow until the daily low is broken again, from where we are going to expect a bigger pullback, like breaking the low point, and we can expect a nice bullish flow that we can trade all the way up to the previous daily 71 level that will be located somewhere around here, from where we can again look for bearish flow targeting the daily low point. This is the current flow we can say. So this is US dollar Swiss franc. So far, all of the pairs I broke down has a really high potential. I did not share any trade idea on these pairs yet because we are waiting for our 71 levels to be mitigated. Without 71 levels mitigations, I cannot share ideas, I cannot share trade perspectives. We are just simply waiting for our forecasts to be fulfilled, and after these forecasts are getting fulfilled, we can apply our entry models on the 71 levels and we can have nice trades. But so far, all these pairs have really high potential to actually print something. Next up is Euro AUD. What we see on Euro AUD is that, let me just show you the daily time frame first of all. On Euro AUD, what we had was a really strong bullish flow coming from this low point to the high point, price being stuck inside of this daily range so far. So we are actually taking into consideration that this is an internal range on the daily time frame. But what has happened here, if we don't really count the previous daily structure, is that price started to form a nice higher high, higher low structure. It broke the last recent high point here, from where it dropped down significantly, breaking the low point. And then what it did is that it created a pullback. From this pullback, it took out the previous daily low point, and from this daily sweep, it created a really strong push to the upside. So basically, it's on the way to break the high point again, and not just this high point, but the previous daily high point as well, right here. So what I'm expecting on Euro AUD is that some of the 71 levels will actually give us a nice confirmation, and this daily high point will be taken out, and we can take this flow, this 4-hour flow, all the way up to this daily high point, where we can expect a bigger pullback down to some deeper 71 level, for example, located here. All right, switching back to the 4-hour time frame, what we see on the 4-hour time frame is a nice flow, again, bullish flow after the daily low point takeout. Daily candle sweep took place here, from where price immediately skyrocketed to the upside and broke the swing high point, meaning it created a swing continuation break on the 4-hour time frame. What else we see is that price created a pullback here, from where it created a no break, nothing, just a volume gap and an order block, and from this low point it could break the high point, creating a continuation break on the 4-hour time frame. After creating this continuation break, it created another pullback and made another continuation break lining up here, which means we can pull out two Fibonacci ranges, trading ranges, one from this low, second from this low, which leaves us with 271 levels. The lower level is actually located here. It lines up with the order block perfectly, and the higher level pulled out from this low point is located here. And basically, this lower level, this 71 level, is inside of the higher levels range. So it's a pretty high confluence trade once again, because two levels are lining up with each other's, especially with this order block. So what I'm going to expect here is that price will come down to the 71 level, where we will see our 15-minute entry confirmation being printed, and then we can take longs targeting the external high point. We can expect a nice break of structure, a new structural high point, a new Fibonacci range, and then further longs can be taken all the way up to the previous daily high point, which was located there. All right, switching then to the 15-minute time frame, taking a look at this. What I do see right here is that, yeah, price already arrived into the order block region. And basically what I'm expecting here is that price will create some fake out, some market structure shift without creating a sweep of anything. Then it will take out this liquidity, will trap all the buyers, early buyers into a position, take their stop losses, will sweep out the low, from where we can actually see the real market structure shift to happen, from where we can take these longs targeting the external 4-hour high point. Okay, so this is EUR/AUD. So far, all the 5 pairs, pretty high potential. Last pair, gold. Gold actually has nothing. Gold is doing gold stuff. Let me just recalculate the ranges, because we have so many ranges marked out here. For example, we have this low point which initiated the break of the high point at this level, from where price created another pullback, from where it made another continuation break. So basically, this is the last recent low point from where we can pull a Fibonacci up to this high point. What we see is that the 71 level is located exactly on this line, and we are waiting for the 71 level to be mitigated. Obviously, I'm adjusting all the other Fibonacci's, and there's another 71 lining up here, pulled out from this low point. Actually, we can pull it out from this low point. It will be a more precise pullman, and I'm going to delete the swing range, because this is what we do care about now. So plan gold. What happens if the 71 is getting mitigated? Obviously, we are waiting for a 15-minute confirmation plan targeting the 4-hour external high point. If price can't create a confirmation on the 71 level, there's not enough room here to look for a bearish break and a bearish confirmation. So most likely, if price takes out this higher level, then it will immediately come down to this lower level, and where we can look for another confirmation. But actually, I'm not really expecting anything from gold now. You know, I do prefer the other pairs to be traded right now. Gold is just relentlessly, unstoppably pushing to the upside. It's better to invest in gold than to day trade it. If you invested in gold any time of the previous months, you just made a significant amount of profit. So yeah, so we have high potential on all these pairs. We are waiting for the market open tomorrow to happen, and then we are going to crash the markets and collect another nice like 20 risk-reward ratio on this week, because last week was a really great week in terms of risk-reward ratio, in terms of trades. I took 4 wins, 2 losses, and 1 or 2 break-evens. So I'm expecting the same. Really great outlooks. So yeah, let's just crash the markets. And now I'm stopping the recording, and we are starting the question and answer. If you guys have any kind of question that you would like to ask from me, use the chat. I'm going to answer every single one of your questions.